This 1 hour chart of the Euro-Canadian pair gives us a rally from this green arrow I've drawn, which conveys a swing point low, up to this very prominent rejection wick high, which is also a swing point high, preceded and followed by two lower highs on both sides. And the move from the green arrow to the red arrow can be called an impulse wave or rally aligned with the higher level trend. In fact, in the background you can see one illustration of what I'm talking about here. There was a smaller rally to this swing point high. Then price pulls back a little bit. We can draw a Tom DeMark style trend line. And you can see in the background when price broke upwards through that corrective resistance trend line, that was an accurate indicator of the next leg getting underway. But I'm more interested in the one which gives us a retracement still intact to the far right hand side of the chart as I've drawn it. Now if you're a fan of Fibonacci, that particular type of annotation can work very well in conjunction with what I'm talking about here. You don't have to, but it is a possibility if you wish. So we'll connect the green arrow to the red arrow with a standard Fibonacci retracement. Maybe for clarity's sake, I'll just simply get rid of the data. And what we see is a hammer, a swing point low here, poking just below the 38 fib, which is interesting. All it does is confirm that off that high we've got a retracement or maybe even a channel forming. It seems to be corrective. But what we're going to look to do here is draw a trend line from the interim top, which seems to outline, as close as we can get it, the major junctures comprising the retracement or correction. So I'm going to do so like so. I'll start off with this connection point here, but this is another example of where we might need to tweak the trend line just a little bit as we go, because we saw price poke a little bit above it here without closing above, giving us a new connection point or a more recent one. So let's just draw the line like so. There's the interim top, there's a lower high. And so what we're looking for here, if we have valid reason to be bullish on this pair, most particularly based on top-down analysis, we're going to look for an upside break of this corrective or resistance trend line. There we have it in spades, the very next bar. It would tend to suggest that the major outlines, first of all the rally, then the retracement, are behind us, and the uptrend continuation move, which should take us to at least the 27% extension unless there's a double top forming here, that should be underway, so we should be able to establish a generic long bias. It doesn't mean we're going to jump into the trade right away, but our bias is actively long. And you can see what happened in the aftermath. Price rallied quite nicely. So the main component of this thing was identifying a rally which seemed to align with the trend, identifying an interim top, identifying a corrective pullback from that top, finding the junctures on which we could draw a corrective resistance trend line, and then waiting patiently for evidence of price breaking the trend line in the upwards direction. Now I'll just foreshadow a technique that we're going to talk about later, whereby you might not necessarily need to wait for an hourly bar close to confirm the hourly chart breakout. You could transpose this corrective resistance trend line to the next lower time frame, the 15-minute chart, and as long as you get a very strong, clear, punchy up close on a 15-minute bar through that trend line, that can serve as an effective early warning signal of the later hourly bar close through the trend line, which of course is a breakout signal.